Okay, well, if Patrick joins us in a bit, that'd be fine. But otherwise, I think we've got everybody, right, that we're expecting.
Mhm.
All right, so I guess I will go ahead and call the meeting to order at 1:02 p.m. Did everybody get an opportunity to look at the minutes from the last meeting?
Yes, everything
Okay.
was fine to
I'll
me.
make a motion to approve the minutes.
Okay.
I will second that.
Okay, and I think we're going to need to do a roll call. So Dave, yes. Steve,
Yes,
Ron,
Yes.
Elizabeth.
Yes.
Okay, motion passes. Meetings or the minutes for the July meeting are approved. The only other item for old business is the Chris Welchel disability hearing. That is still underway. I have gotten 2 bills from INSPE, so that would signify to me that we've gotten 2 of the 3 IMEs completed, and we're still waiting on the third one. But if the first 2 have come in, I don't expect the third one to be much further down the line. Does anyone have anything that they would like to know or share about that?
I got nothing.
is it
Okay.
inappropriate to ask what the outcomes of those first 2 were?
I don't have any outcomes.
Let's just wait until we get them all, and then everybody gets everything at the same time, including the applicant, and
Okay.
it's kind of a due process issue.
Okay,
Yeah. And the even easier than that is I don't have the outcomes. They've only sent me the bills. So I'm guessing they're not going to share their findings until we pay them. So,
Fair enough.
yeah. But that process appears to be well underway. So I'm thinking that we will probably need to call a special meeting before our next quarterly meeting because we'll have everything that we need to go, ready to go before the next meeting. But when that happens, I'll contact everybody and we can get that set. So if no one has anything else on that, we'll keep moving on from old business to new business. First item on the agenda, public participation. And if I scroll through, it doesn't look like anybody's on here that we didn't expect to be on here, and therefore I'm going to say that there is no public participation. With that being said, next item is the financial report. Ron?
Okay. I sent the quarterly financial report out to everyone. There's not anything unusual there that really we need to highlight it. Of course, this is for the 3 months ended September 30th. That'd be July and August, September. I'll just mention a couple things on that front page. Our equity investments are 65% of the fund right now, so that's exactly what the law allows. The equities increased a total of 8.7% in the quarter, so that was a good quarter. I think I know it's dropped since then in October. There was no significant activity in any of the equity as far as buying or purchasing. During those 3 months, Garcia purchased 4 government securities for $700,000, and Madison purchased 5 securities and sold 7 for a net reduction of $290,000. So both of those 2 managers were pretty busy for that quarter. Some unusual receipts or payments during the quarter. We went ahead. Is it Douglas? Is it Doug LeConte?
Doug LeConte, yes.
Doug LeConte requested his refund, and we paid him the $13,483 in September. That was for, gosh, I forget how long ago he worked. A number of years ago.
That would have been in the 90s. Yeah.
Yeah. Changes in benefits in the quarter. We had two people that hit age 55 and got their first raise of 3%, and that was Andrew Charles in August and Bob Fitzgerald in September. I happened to see Bob Fitzgerald out on the golf course, and he personally thanked me for that, even though I didn't have really anything to do with that. And as far as changes that, oh, and one other thing, Wanda Scott passed away in first of October, so that's after the quarter, but I mentioned it. I have no scheduled changes in benefits, no increases or anything for this next quarter coming up. So that's really all I have to say about that.
I'll make a motion to accept the financial report.
I will second that.
Okay, we'll do another roll call vote. Dave, yes. Steve,
Yes.
Ron,
Yes.
Elizabeth.
Yes.
Okay, motion carries. We're going to go ahead and accept and file the quarterly report from Ron. Moving on, next item on the agenda, buyback of service time, FMLA. Adobe, last quarter we had talked about a member of the fund who took some FMLA time for pregnancy. And the question was whether that unpaid FMLA time she could buy back service credit that she hadn't paid into the fund. So any thoughts on that?
My gut reaction is you got to work to kind of be able to pay the credit, but I don't know. Let me think about it. It kind of like getting to the end of your service or whatever. You got 20 years in and whatnot. He said, "Oh, wait a minute. I want to buy 10 years worth of creditable service and before I go out." Well, I don't know whether it makes a difference because of it's the FMLA. Now, was she getting an FMLA benefit during that time, or?
I don't believe so. I believe she just used FMLA time to take time off for the birth of a child, and it was unpaid leave, is my understanding.
Okay, I don't know, to be honest. I will. I'll find out more in the next by next Friday, and I'll email everybody my thoughts.
Okay. All right. Moving on, next item on the agenda, board vacancy. We still have an active member board vacancy for Doug Pipkin's spot, the spot that when his term expired, he did not reapply. I believe we sent out one round of letters looking for people who are interested and did not get any responses. And so we were going to do that again. Anything on that, Dobie?
Did Doug resign?
No, his term was just finished. So at the end of his 2-year term, he did not ask to be, he didn't put his name in the hat to.
Yeah, we held an
For the new
election
election.
and he chose not to run again.
Yeah.
In the absence of election, he's still a trustee theoretically, but since we had an election, he's not. Try it again, see what happens. It's always better to have a 5-man board than a 4-man board.
Oh, so okay. So I guess Karen will need to mail you another list.
Please,
For-
yes.
Okay.
And, I don't know, obviously, well, they don't have to get as much education as they had to previously. I don't know if we've got any young guys that look like, they're going to be lifers. It's hard to tell that, but that's who we need.
Yeah, Dave, maybe you could talk it up with if there's some likely suspects out there.
I've tried.
I'm sure you have.
It's easy for them to say yes to my face, but then it doesn't seem like anybody ever mails their form back in. But I will keep trying, and if we get Karen to send you that list and get it mailed out quickly, or in the next, I'll give it another go with everybody around here to let them know that, hey, we need somebody who's interested. So
Yeah.
we will keep working on that. Next item on the agenda is the annual funding request to the city. Elizabeth, Ron, any thoughts? Anything you'd like to share?
I'll take it since I prepared the memo the report and I send it out. Every year we have the actuary. He gets all of our information, our census of all of our retirees, our current employees, what they make, how long they expect to work, all that, and also our financial information as of June 30th. And then he gives a whole bunch of information, but one of the most important ones is he calculates how much the city should contribute the following year to the fund for appropriate funding. And that amount that he calculated this year was $2,721,514. Now when he calculates that, he's using a little bit different methods than what the city, what we've agreed to with the city. He also calculates the amount that with the methods that we agreed to with the city, and that amount for next year is $148,000. And the city funding is about 79% of that higher number. It's interesting to note that that city funding of 2.148 million is considerably higher than the city calculated amount of the previous year of 1.8 million. So that did go up quite a bit.
Right, and I think that was intentional because in the 5-year transition plan to the new funding, it was going to go up every year. I mean, we knew that.
It is, and it probably, I think as the actuary mentioned, our return last year was not as good as it's been in those previous 3 or 4 years due to the stock market decline, and so that probably had a big part of that. No.
Yeah. So the way Todd explained it to me and the way Kevin has explained it to me is, so basically we planned on a 5-year transition. This would be year 3. They kind of scheduled that to happen over 4 years, and the 5th year is kind of a catch up if we need it. But those numbers don't change every year. The ramping up funding plan is what it was from the beginning. And then if there's if we need another jump before we get to the full funding, that's what the 5th year is for.
So essentially, if next year ends up being a really great year and we hit it out of the ballpark and make a whole lot of money, and the actuary comes in and says, oh, you need a smaller amount, we're still kind of on track to continue paying that ramp up amount like the agreement that we've talked about.
Right. So there's 4 years of increases. There was 2018, 19, 2020 is what we're levying now. And then the next tax levy will be the 4th year. So, and then I think at that point, they'll need to kind of, when we get to that 5th year, they need to reevaluate and say, well, did we get to where we needed to be over those 4 years, or do we need another kind of step in between?
Okay.
So I think we do need a motion to approve this funding request, and just because I think it's required by law.
Make a motion to approve the funding request.
I will second that.
Okay. Roll call vote again, I guess. Dave is a yes. Steve?
Steve, yes.
Ron?
Yes.
Elizabeth?
Yes.
Okay. Motion passes. With that being said, moving on, next item on the agenda, approval of the annual actuarial report.
There's not much more to add to that. That's the report that the levy numbers were based on. I think you all have a copy of it, so.
Right, and that's the one that we've been kind of emailing about a little bit, Elizabeth, and decided there's
We
not
did-
really,
To come talk about it, right?
what's that?
We decided we didn't need Kevin to come talk to us about it.
Right. It's
I mean,
kind of,
we've been through that a couple times. It's pretty routine, but I think at some point when we get to that like 5th year of the transition, we probably will want him to come. But
Mhm.
we're just kind of following the plan. So, but I'll make a motion to accept and place the actuarial report on file.
Okay, is there a second?
I'll second that.
Okay, we'll do another roll call vote. Dave is a yes. Steve,
Yes.
Ron,
Yes,
Elizabeth?
Yes.
Okay, motion passes again for the approval of the annual actuarial report. We are flying through our agenda. We've made it to the investment presentation and we don't have anyone to provide that. So does anyone have any thoughts on anything that they have seen? Ron, you've probably taken a look at kind of what we've been doing with the money.
I've looked at it and I looked at his report, which I don't know if he sent to everybody, but he sent to me earlier.
He did, yeah.
And, I think as of September, it was a good quarter. It was probably close to an 8% return, 8.7% actually, I think. But since then, it's dropped down, and I didn't see that he made any recommendations for any changes or anything in his report. So.
Yeah. According to this quarterly report, where do we currently stand? Is it about, that's September. So 43,230,000. Oh, that's the ending market value for September was about 42,419,000.
Yeah, I'm gonna call up his report right now.
Yeah, that's what I'm looking at. I'm on page 25 of 40, and that's the number that I saw. So. Dobie, is there any idea on, has there been any more talk or anything new about when these transfers are going to start beginning to the state?
They don't even have their board elected, do they?
Oh, I think they were talking about working on it when we went to the
Yeah.
meeting.
So I don't think that board's elected yet. I'm not sure when that election is, if it's yet this year. But until that happens, I'd be shocked if they ask for all your money in the next 12 to 18 months or 24 months. They got to get up and get going. And I know who they want already, I think.
I thought there was a deadline of like December 31st, 2021 or something.
Yeah. So, yeah, it's like I say, they're not organized yet. They don't have their board. There's an interim board and then there's a final board, and it's kind of hokey. So we just have to keep on going like nothing's happening, because nothing is.
Apparently they're hiring staff though.
Yes.
Yeah. They did talk about that at the annual IPPFA conference, which, by the way, Steve and I attended. And I won't speak for you, Steve, but it was not the best conference I've ever been to, but no fault of the IPPFA. It just, going to a conference in the middle of a pandemic is not, wasn't a lot of fun.
Well, it was a first for me. I did send Patrick a text message, and he's going to be signing on here in a couple minutes.
Oh, okay. Any problem at all talking about the last agenda item, and then we could come back to him when he gets here?
No, good.
Because the last one is changes to the investment policy, and I know this has been on, we've talked about it previously, and my recollection of kind of where we stand on that is, what's the point if this is a short time thing, where we even have to have an investment policy until there was some further direction from the state as to, turning over these funds.
The point is you want to be doing the job as a fiduciary with no end in sight, to be honest. If something were to happen in the next 30 days or 60 days, you want to be able to be in a position to do something if you think it's appropriate. And
We decided to put it on every agenda because that way, if in the course of our discussion with Patrick, we want to make a change, we can do that. It's not that we need to, but that we can, because in the past we would have a conversation with Patrick and we'd be talking about changes to the policy, but we couldn't take an action because it wasn't on the agenda.
Yeah,
Oh.
Dave, we have investment policy. Patrick
Right.
drafted it up and everything. These were, if he would recommend any changes each meeting to it.
Yeah.
Okay. Yeah.
We can, like, hit it at each meeting, and if there's nothing, which is fine, but it has to be on there if we ever do want to make a change.
Okay, well, I guess we're probably going to need to wait on Patrick to see if he's got any thoughts on that then. Maybe we can come back and touch on it.
I don't know if the office had sent out our newsletter to you. There's a case there involving a police officer from Roselle. It's the Village of Franklin Park versus Sardo case. And Mr. Sardo, before he was a police officer in 1996, he served in the Marines till 1991. He had a tour of duty in Desert Storm, and during that duty, he was exposed to several traumatic experiences, including deaths of fellow Marines. Post-discharge, he was diagnosed with PTSD by the Department of Veteran Affairs and received a 90% disability rating, 70% of which was related to PTSD. He received outpatient treatment, including counseling, anger management, and medication. He continued to work full-time during his course of treatment. During his time as a police officer, he had experienced a number of traumatic events, including firefighters and police officer deaths, but none of those rendered him unable to perform his job. And he always got exemplary or excellent performance reviews. And then he reports in February of 2014 to a fatal Metra train versus pedestrian accident. And he arrived to find disintegrated body parts all over the area. And as the lead investigator, he collected the evidence, and he had shown the husband a photo of a victim's husband, a photo of the tattooed body part for identification. And he began screaming and running and howling, and Mr. Sardo was unable to forget that screaming, and he had a reoccurrence and depression, of PTSD, thoughts of suicide. So he applied for line of duty disability. The board granted that to him. The city had intervened, took an appeal. The appellate court basically said, yeah, he gets the line of duty disability. He was able to perform the functions of his job with no problems, even though he had this condition. It's no different than as if he had a bad knee, essentially, but it could do the job. And then there's one incident that knocks out the bad knee or knocks out the psyche, and they're entitled to line of duty. There was an active duty. He was investigating that scene, and that's when it happened. So you got to take the applicant as he was. The city has to hire somebody like that as well. Same way, if they had a bad knee or bad back, but they can do the job, that day, then they're hired. The other thing I wanted to mention, there's also a case out of the first district that FOIA applies to personal email and text of public officials. So if you happen to do that, just know that you've probably opened all your email and all your texts in some kind of FOIA request that somebody will have to go through and determine if in fact these are or are not private or public matters. And I don't think anybody wants that to happen. So start thinking about that. A couple of mentions of cases from out of state. California had ruled on some pension modifications that they're constitutional. Oregon State had Supreme Court rules against the employees. There's a couple different ones there. Take a look at. I don't know if they're state specific, but constitutional issues are in the wind these days. So take a look at that. And other than that, I think that's all I got. We'll get back to you on the FMLA issue.
Okay.
Patrick responded again, said he's having Wi-Fi issues, so I rather doubt he's going to make it.
I had Wi-Fi issues too today at my office. It's weird.
Oh, So what do you want to try and wait for him, or how does everyone feel about that?
I doubt it. I mean, if he can't make it, he can't make it.
Okay.
I mean, I think we all got the report, so if there's, something we question about, we can individually ask him by email. We can't engage in an email conversation, but.
Right. And I agree with you.
I'd make the motion to go ahead and accept his report.
Second.
Okay, roll call. Dave, yes. Steve,
Yes.
Ron,
Yes.
Elizabeth?
Yes.
Okay, motion passes to accept Patrick's quarterly report for our investment portfolio. With that being said, that is everything that we have on the agenda. Maybe I should just put it on the record, Dobie, that I am here at the Urbana City Building. So I am the member that is present at the location where the meeting was to have occurred. And everyone else is zooming in, and been recorded. I think we've checked all the boxes that we need to for doing this properly in the age of COVID. With that being said, if no one else has anything, it's currently 1:30 p.m. Is there a motion to adjourn the meeting?
Do we need to set the next one?
Oh, yes.
Well, before we adjourn, do we have a date for the meeting in January, or?
What, fire, Elizabeth? What day were they?
I think, I'm looking at the calendar, I think it was January 29th, but we didn't actually approve the schedule because
Because you didn't have a quorum?
we didn't have a quorum, right? So,
And that one was a little out of line with what typically is the fourth Friday. That would have been like the fifth Friday or something. I don't know.
right, that's the 5th Friday. So I'm going to guess, I'm going to assume everybody's going to be okay with the 29th. That's what was suggested on the agenda. But I mean, to me personally, it doesn't matter if we do them on the same day or not, especially when we're Zooming. It's,
That's a good point. I don't have a preference, the 22nd or the 29th. I'm available for either.
yeah.
Steve or Ron, you guys have a preference for either one?
I don't have a preference. It's just for planning purposes, it's nice to know ahead of time which one it is. It used to be, I agree with Dobie, it used to be always the fourth Friday of the month, but it seems like the last 3 meetings or so, it's kind of been the last Friday of the month, but it doesn't really matter to me, especially if we're doing the Zoom meeting, so.
The last Friday of the quarter. In fact, I've already got it put down that way on my calendar. I'm looking at it right now.
Oh, so you already have it for the 29th?
Yeah, I do. So I must have put that in some other time when I maybe put in last year's, to just have it keep repeating as a fourth Friday of the month of the quarter or whatever it is. I don't know.
Okay.
Yeah, it's there.
Somebody decide. I don't care.
The 29th it is then. That way we'll just kind of keep on par with fire. That's kind of the way we've always done it. Okay, so we'll set our next meeting for January 29th at 1 p.m. Anything else we need to do before we?
We got Patrick now.
Oh, do we?
Uh-huh.
Hello.
Oh,
He is.
you just squeaked in.
Hey, sorry about that. I had Wi-Fi issues and I had to change from my office to the kitchen to the. Finally got hooked up here in my TV room. So.
All right. Well, I suppose we'll turn it over to you then. We made it through the rest of the agenda, and so the only thing we didn't really have anything on was the investment presentation. So, Patrick.
Okay. Does everyone have the packet, or does somebody have the ability to show it on the screen?
Oh, I've got it on my screen on my. I wonder if I can do it on. I'm zooming on my phone and I've got it on my computer. Let me see if I can pull it up and somehow get it to work.
While Dave's working on this, I'll just take you a little bit of our thoughts on the economy and kind of where we're at. Obviously, the market had been doing quite well up until just a few days ago. And with that, we really felt like, and we had this opinion starting back in early April that that the market was going to respond quite favorably to the stimulus package. We really felt like that put money in consumers' pockets. Even with the shutdown, people were spending money and have continued to spend money. And the market and the earnings responded quite good, especially for the largest companies. And everyone knows the names that have been driving the market. With the market pullback in March, we went down about 36% on the S&P 500. We fast forward it to today, we've recovered and recouped all of that. And on top of that, we now see that the expectation of the economic recovery has been quite strong, up 33.2% or 1% as of yesterday with GDP. We continue to believe that that's going to stabilize, especially if we have another round of stimulus. What we thought, though, about 2 weeks ago was that, there we go, that we would probably experience a range-bound market for a while. And that's, there's a couple different things that are playing into that. One is we've had this huge explosion. And Dave, if you could page forward.
Sure. You're going to have to let me know what page you want me on.
Yeah, why don't we just go one more? The fiscal policy stimulus has been quite good. Page forward one more. Monetary policy helped. This is part of the stuff I was talking about in late March, early April, where we felt like the market would do well. The big question would be, is earnings coming back? And you can go to the next one. Here, earnings revision. You can see that basically earnings fell off a cliff when the shutdown happened. They have come storming back. Okay, so not only did you have the market come storming back, now corporate earnings have come back quite strong. Those are concentrated, though, in a few number of very large companies. Okay. Lots of businesses are doing okay, but there's very few that are doing as well as Amazon, Facebook, Microsoft, Google. Those are just to name a few. Netflix. Where we haven't seen a recovery is in small and mid-cap businesses. And what's a little bit alarming is this, second round of maybe shutdowns that we're seeing in Illinois. I don't know. Have you guys moved to a new level in Urbana?
I think they're talking about that today, is today the day, Elizabeth?
I think today's the day. This would be our third day over 8%. So if we're over 8% today for Region 6, then yes, even though we're fairly low here in this county, but it is.
They announced that earlier today, so it goes into effect Monday at 12 a.m. So as of Monday morning, no more eating or drinking in establishments.
Okay. Well, so that happened last week, as everyone knew, up in Chicago. And I just happened to be up there, and there was quite, you didn't hear about it, but quite a few angry people about the shutdown coming back, and then this week, you had the sports issues and a response from that. We really believe that it's going to be awful tough to go into another round of hard shutdowns. We don't think people are going to go for it this time. That's our company's belief, that we're not going to have people willing to do what they did in March. And some of that is because of just, the fact that people have, been away from family and other things. But other parts of that is that the hospitalization rates, the death rates, and the therapies that are being used to treat this have gotten better. And then we have a much clearer picture on what demographic this impacts the most, meaning that if you're 55 and under, very low probability of hospitalization, very low probability, even lower, much lower probability of death. And so we've also seen several reports that have come out recently talking about people believing that, the shutdown actually could make it worse. So our company believes that after the election, there's not going to be the will to have another hard round of shutdowns. It doesn't mean that there won't be areas where we have flare-ups and people try to do it, but as a nation, we don't see that happening. And so with that, we continue to believe that the market, people go back to work, okay, which is good. And but with the recovery we've seen in stocks, we don't think that we move to higher levels until probably after next April, okay? And so we think we're going to be range bound. There's going to be some volatility. We're seeing that in the market. Dave, if you'll move forward another slide. I talked about a V-shaped recovery. We believe that that's in place. We think that the momentum's there and it's strong enough to continue to carry us. And we also feel that there will be additional stimulus quickly after the election, regardless of who wins. And the only difference will be, if the Democrats and Biden wins the presidency and they gain seats in the House, we think the stimulus package would be larger, probably more 3 to 5 trillion with a T dollars. And we think that the market would respond very favorably to that, obviously, because most of that money, when it's going out to people, is being spent. And then you would also have the shoring up of states and local municipalities in many cases. So that would be a boom. It doesn't, mean that if President Trump would win and there is, everything stays the same, there wouldn't be a stimulus package, but we think it'd be less. It'd be more like 2 to 2.8 trillion is where we think that ends up, which would still be a very hefty stimulus package. And so the market would probably respond well to that also. You have to remember we didn't start having the negative impacts from the last round of financial stimulus that happened in 08, 09, really until 2018. And that's when the Fed started to raise rates and put bad debt out on the market. So, you know, everyone is so fearful of all this debt on the balance sheet, and for good reason, right? Makes a lot of sense, and we're going to have to pay it back. You know, how do we get rid of it? Probably through hyperinflation, which if you take energy out of CPI right now, we're in an inflationary period of time. But I don't think that the markets would be real nervous about the Fed and big changes to, you know, I know there's been talk about raising taxes if there's a President Biden, but we don't anticipate that would happen real quick. You know, it's pretty hard to raise taxes on the general population in corporate America after a pandemic. If anything, the largest companies in the environment could survive it, but I think small business, we'd have massive problems with that coming. So from an election standpoint, I'll just throw it out there right now. The most important thing that we believe is gridlock. We think gridlock is a good thing. And it's much more important than who wins the election to us that there's still gridlock in the government. Okay. Dave, you can go to the next slide. You know, so here's the S&P 500, and the reason why we believe we'll be range bound is we're at an upper limit if you're you know, if you look at it from a charting standpoint, and where we would anticipate there to be some strong resistance and for the market to be able to break through these levels. You can go to the next slide, Dave. We are officially in a recession. Those are those gray bars, okay? Even though we knew we were in a recession back in the summer, until it officially comes up that we've had, you know, negative GDP growth. That really isn't an official statement, but now it is official. What this blue chart shows is large cap versus small cap. And one of the things that we see usually coming out of a recession is that large cap companies perform better than small cap, and that's why we're down. But then when we come out of it, those green arrows pointing up, we see smaller companies do better, okay? One, it's a great time to start a new business. You know, so if you know somebody that wants to open up a restaurant, probably in the next 6 months, it'll be a really good time to become a restaurateur. As you know, there's tons of space available. There's lots of equipment because 20 to 30% of all restaurants are closing. You know, there's going to be employees that need jobs. And so that's just one area, but we think other small businesses that weren't able to operate as efficiently, had more difficulty you know, producing their products during this period of time, they'll do quite well coming outside of the recession. This is a little bit different because of the amount of raw materials and things needed for business that are backlogged, whether it's in alcohol, where, you know, alcohol distilleries were shut down for weeks, and now they're, you know, if you look from European alcohol producers, it's hard to get, or it's steel, or it's manufacturing products from China. All of those things are backlogged right now. And so we think that it's going to be a little bit probably of a slower response for small companies to come back, but it will happen. Did somebody have a question? No? Okay. Dave, next slide real quick. I just kind of went through this, so we won't go into any more detail on the leveraging of earnings per share growth. That gets a little too deep. Next slide. You know, the biggest concern, and we have a little bit of this here because you have the Vanguard 500. What I like about the fact that you have the Vanguard 500 and ClearBridge in your portfolio is ClearBridge is much more diversified than the S&P 500 right now. And we're seeing tons and tons of people pile money into the S&P 500. And one of the things that we know is that this is equal weighted S&P versus market weighted. And what that really means is a market cap weighted S&P 500 has been pulled up by basically about 10 to 12 companies have pulled that S&P 500 quite a bit higher. An equal weighted S&P 500 is the performance of each of the 500 companies in the S&P 500 are weighted the same amount. Okay. And that has underperformed compared to a market cap weighted, which, the largest market cap companies are Microsoft, Apple, Google, Amazon. One of the things we're a little concerned about is that keeps on attracting more money. So every time the market pulls back, investors are piling money into the same companies and into the S&P 500. And usually that ends poorly for investors. And so we have the S&P 500 in your portfolio, but you also have ClearBridge Advisors. It's not that we don't think the S&P can keep going higher, but at some point in time, we anticipate, much like we experienced from 2001 to 2010, that those 8 to 10 companies become overvalued and we start to see the rest of the market do better than them. Next slide, Dave. I'll stop before I get into the portfolio and see if there's any questions. Hearing none. As of September 30th, the portfolio for the Urbana Police Pension was $42,419,000, slightly over 65% in equity at $27,800,000. Domestic equity made up about 47% of that, with about $20 million. Hard to believe, just in domestic equity, there's $20 million. It's grown quite nicely. Large cap made up 40%, divided between, I just talked about the S&P 500 index with about 24.5% or $10,500,000, and ClearBridge Advisors with just under $7 million at 15.96%. Mid cap equity made up about 3% with 1.3. Small cap equity made up about 3% with 1.3 million as well. And then international equity, which finally started to do quite a bit better at 18.5% with $7.8 million in there, divided between developed markets with about 14.5 or $6 million, and emerging markets at 3.82% of your portfolio with $1.6 million. Interestingly enough, I didn't go through it in the capital markets part, but in emerging markets, we believe that China is completely through their problems associated with the virus, and their currency is doing quite better. Their economy is doing quite better. And more importantly, they brought rates down and held them low, and we're starting to see their rates go up, their interest rates. And we anticipate that would happen as we get through this as well, and where that will impact your portfolios in the fixed income component. You have 34.46% of the fund, or $14.6 million in fixed income between Madison, Garcia Hamilton, and a little bit in your cash management account. I didn't put anything in the capital markets presentation, but China's kept their rates low, just like our Fed has. But what's happened is, because the economy there is coming on fast, their rates are naturally going up where they can't hold them down. And so we would anticipate, if we continued to come through this pandemic and the Fed keeps rates low, which they said they're going to do to 2023, the middle part and the longer part of the curve would go up. And what that really means is, a year ago, the 10-year treasury was at 1.87%. If you went out to buy it today, I'll say it's at 0.77%. So you're getting on a 10-year US Treasury bond less than 1%. What that did in your portfolio was, for every 10-year Treasury you owned over the last year, it went up by 11%. If we experience the inverse of that, meaning that rates went up by 1% on the 10-year, naturally, just because things recover, no matter what the Fed's doing on the short end of the curve, we would anticipate 10-year bonds would go down by 10%, okay? So that's something that we'll be working with in the next year with your bond manager. Any questions there before we plow through performance? On the next slide, Dave. Even though it says your portfolio is 65.54% in equities. You actually have close to 2% in cash between ClearBridge and some other managers in your portfolio. So you're safely, even as of this date, below the 65% equity to bonds, because that 2% could go over to your fixed income side. And that shows up on the far right-hand side of page 2, where there's 493,000 or 439,000, excuse me, or 2.2% just in domestic equities. You have a little bit everywhere else as well. So there's no real need to rebalance, which is why we didn't make a recommendation today to rebalance the portfolio, unless there is a cash need over the next few months that couldn't be met by the assets that you currently have. I didn't get a chance to listen to Ron's part of the presentation, so I don't know if you have other cash that will take care of that at this point in time.
No, I don't, and we will need a transfer of probably $500,000. Maybe, probably not, well, for sure not till November, but and possibly December. I'm not sure yet. We just don't know that the monies that are coming out of the treasurer's office are real difficult to count on exactly like they used to be.
Well, so there's $351,000 on page 2 just with ClearBridge Advisors, and there's another $64,000 with the Vanguard 500 on the far right-hand side of the page. So there's $400,000 right there. So it wouldn't be a problem if you needed some money for us to figure out how to get you to that $500,000 amount pretty easy. I do not anticipate, unless the market got really hit, that ClearBridge will invest those dollars. Meaning that if the market goes down by 20%, you might see him go in and buy some things that he likes, but he usually does that after things start to recover. So I'll put a call out to him, but if you do believe that you're going to need that in November, Ron, we probably need to get it approved today, I would imagine. And then, maybe reach out to me a couple weeks before you need it, so we make sure it gets there in a timely manner. That works.
So do we need to make a motion to pre-authorize transfer of funds as needed upon Ron's request for monthly payroll purposes?
Second.
Okay. So that was a motion, Steve, on your part, and a second by Elizabeth.
Yeah, I think it started out as a question, but I think, yeah, we can make that a motion, yes. And I'll second if it hasn't been.
Steve, motion made by Steve, seconded by Elizabeth to
Okay.
pre-authorize the 500,000 cash for payroll purposes. Roll call, Dave, yes. Steve,
Yes.
Ron,
Yes.
Elizabeth.
Yes.
Okay, motion carries. Passes. Patrick?
Okay. If you can go to the next page. Here's the performance for the Urbana Police Pension Fund as of September 30th, 2020. You got to remember September was a rough month. And even with September being a rough month, the current quarter was up 5.5%, where we beat the bench. Year to date, you're up 272, slightly below the bench at 321. Trailing 12 months, which is hard to believe, at 814. If we would have said that back in July, I would have bet you on that one. 3 years at 6.25, 5 years at still almost, let's say 8% at 790, 7 years at 651, and 10 years at 656. So pretty good numbers there where we ended up with the quarter. If you go down below, the Urbana Police Pension Fund started the quarter with about $40 million. There was $157,000 of income and $2.1 million of of growth to that 42,419,000. If you go all the way over to the far right-hand side, there's been, let's say, $29 million of growth in the portfolio since inception. And you ended up with that 42,419,000. There's no questions there, and you page over. We can take a look at the individual sleeves, and I'll just focus on the trailing 12 months, the 1 year number. If you go down, you can see the S&P 500 was up 14.5. ClearBridge is at 1014. It's trailing, but you know, one of the things that happens is things usually get a little dicey. If we need money, ClearBridge is a great place to get it from because the valuations hold up really well. Vanguard Mid Cap Fund was up 697. Small caps, you can see, you know, I talked about that, up only 0.63. Definitely wouldn't be a place where we'd take money. If the market gets hit, and let's say we have our meeting in January and we're below the 65%, it'd probably be an area where we look to start adding to for future rebounds. International quarter was good. Year to date, still down. Your managers have done quite well versus the bench, which is nice. Emerging markets, a good quarter, good year to date, but 1 year you can see not nearly as good as the index. And that's really just because those markets have been so strange between currencies and just not as jointed as the US, and the responses around the world have not been as good as we've experienced here. Madison up 411 and Garcia Hamilton up 527. So, you know, those are the individual managers. No, we don't have really any concerns with any of your actual asset managers. I just wanted to point this out that, you know, small cap has really underperformed, and that would be an area where if by chance there's some funds that come in, that's where we'd be adding some money. Okay. Next chart. This is, I think, a little bit more important now than it has been in the past. We had to make this chart a little bit bigger just because it keeps growing, going back to 97. But that blue line is the portfolio value. The green line is the dollars that you've put in and taken out. And you can see that this is really starting back in 16. It's the first time that we've had a downward slope in your principal, right? That means dollars that have come in are less than dollars that you're taking out. And as long as the market goes up, that's, you know, it works. But what happens is as you take more funds from this portfolio, as the market goes down, it's hard to recover, okay? And it becomes harder and harder to recover each time that happens. And we've had this explosion where we got back up to it, but you know, if we go through another round and there's more money coming out of the fund, you know, it starts to level off the growth prospects of your portfolio. So I'll point that out today. I'll stop there unless there's any individual questions on any managers or anything else. Lastly, I'll just bring up, I don't know, I wasn't on the call, so I apologize, but it says changes to investment policy statement. And I don't know if Dobie did this, but you know, there's the sustainability information that's been to a lot of added to a lot of investment policy statements. And I know that I've seen the language that Jim and Rick Reamer have used. And I just wanted to make sure that maybe you guys had touched upon that.
I don't think we have, to my knowledge.
No.
No.
So that might be something to add for the next meeting. I can get that information put in your investment policy statement and email that to Jim to make sure it's what he would like. I'm pretty sure it's what I've seen from you guys at other places, Jim, and then we could get it back out to the trustees for approval at the next meeting.
Sounds good.
Okay. Well, I'll stop there unless there's any questions.
No questions from me. And Patrick, before you joined us, we made a motion to accept your report, so we've already done that. And
Oh, shoot, I didn't need to call in?
well, I didn't say that. So that's been covered, and I think the next meeting for your information is the last Friday in January, which I guess is the 29th.
Okay.
Is there anything else?
I don't think so.
If we could go back to the FMLA thing, I think I've got an answer here. I've already kind of looked at this and I forgot where I filed it. This is an officer who was actually having the baby, or his spouse was having the baby.
She was having the baby, yes.
Okay. Unpaid service break less than 30 days while not receiving a disability pension can be made whole by remitting to the pension fund the contributions that would have been withheld from the active member's payroll. The statutes are silent regarding interest, and the break in service can be the result of any reason: suspension, furlough, whatever. Now, unpaid service break of 30 days or more while not receiving a disability pension, they can be made whole by remitting to the pension fund the contributions that would have been withheld from the active member's payroll. Again, the statutes are silent about the interest, but this break in service can be purchased only if the absence is a result of personal injury, personal accident, or personal illness, not say like their spouses. They took FMLA to take care of their spouse. Well, no, that's not your personal injury. It's not your personal accident or your personal illness. And that's the position, at least, that Lauterbach and Amon, and I think the DOI has taken as well.
And for purposes of pregnancy, I suppose it would be considered a personal injury.
Sure.
Yeah.
I would think personal or illness or any kind of health.
Right. So if I understand you correctly, that officer will have the ability to buy that time back should she choose to do so. Right. Is there anything that we as a board need to do to approve that or to?
Well, no, not until she elects to do so. She can wait till the day she retires.
Okay.
Firefighters have to do that within 90 days of returning to active service.
Okay.
Well, and you said silent on the issue of interest.
The statute's silent, so that being the case, unless the board adopted a regular rule, I would think that there's no interest charged.
Well,
And it kind of, I mean, there's other provisions about when you return to active service after having been out on disability and you receive disability payments, can you establish those years of creditable service back? You can, and there's interest provided for there, if I'm not mistaken. So it kind of argues that if they allow it in one instance under a statute and they don't have it under the other part of the statute, then the other part of the statute arguably doesn't charge interest. So
yeah, that's concerning though. She could wait till the end of her employment and pay it back, and
yeah,
it could be 10 years from now. I don't know.
That's right. I agree.
So you're saying unless we adopt a rule, there's no interest.
That's right.
Well, I can share that information with her and see how she feels. I know when I did talk with her previously, they said it's something the board was looking into and questioned her as to whether she would be interested in it. If possible, her response was yes, she would be. So,
Any idea of total dollars and cents?
oh, I don't know. Elizabeth,
Okay.
do you have, it wouldn't be significant. It was a few weeks. I mean, less than 12 weeks, obviously.
Less than $1,000.
I'm not sure exactly who we're talking about, so I mean we can figure that out.
Yeah.
Yeah.
All right.
Yeah. My gut tells me, $1,000 more or less around that. So, yeah. Okay, well, thank you for looking into that, so I can pass that on to her. Is there anything that the board any other board members would like to discuss that or have any thoughts about it?
Now, can we note that in the minutes for record?
Yes, sure.
Sure, yeah. Sure Karen can include that. With that being said, is there any other new business that needs to be touched upon or anything that's already on the agenda that we've discussed that anybody wants to double back to?
Nope.
With that, it's currently 2:07 p.m. and I guess I will make a motion to end the meeting. Is there a second?
I'll
Second.
second that. Yep.
And I think we have to do everything roll call. So Dave is a yes. Steve,
Yes.
Ron,
Yes.
Elizabeth.
Yes.
Okay. Motion carries. Meeting adjourned. See you all in January.